Welcome back. The breadth continues to remain skewed in favor of the gaining side. 100 points higher on the Sensex on the Nifty for the Sensex as well, 48,271. But names like Ultratech, Shree Cement, Wipro, Britannia, TCS as well as Tech Mahindra, well, they're bucking the general trend. But let's get a move on and focus in on earnings and ICICI Prudential Life Insurance, where you did have pretty smart growth coming in across the board. Joining in right now is Mr. S Kannan, Managing Director and CEO, to talk a little bit more about their strong show. Thank you so much for taking time out. What has led to this healthy APE growth and the strong growth that you've witnessed in the new business premium?
As you rightly mentioned, yes, we have turned the corner and we are back on the growth path. On the growth for the fourth quarter, we saw a 27% year-on-year growth on the APE basis. And if you really look at the March alone, at 108% growth year-on-year, you've had the best March ever in the history of the company, or best monthly APE ever in the history of the company. We also saw a good growth in this assets under management with a 2.14 lakh crores as of March. These have been the highlights. You asked what drove this growth. Essentially, we've been working on diversifying our product mix so that we make the growth a little more sustainable. As you know, two and a half years back, we used to be completely focused on ULIP as a company with an 82% product mix constituting ULIPs. And of course, when the markets go up and down, if there's a volatility in the market, the ULIP portion gets impacted. So we've been carefully working and navigating this space with diversification of our product mix. So today I'm happy to report that we are a 48% ULIP company. We are about 30% traditional products company and a 16% protection company. So this diversification has led us to a growth depending on the consumer preferences during this period. So that has been a primary driver. On the channel side, we've been working a lot to increase our distribution capacity. Apart from our anchor distributor being ICICI Bank, we have tied up with several banks during this last year. For example, you know that we have tied up with IndusInd Bank, we have tied up with IDFC First Bank, RBL Bank, AU Bank, and several other partners. Today, we have 600 partners in total. In this last year alone, we added about 100 partners. These have been the drivers from a channel perspective in terms of the growth. So these two primary factors led us come back on the growth path. And finally, we also introduced a few market-winning products. We introduced a product called Gift Guaranteed Income for Tomorrow. We also introduced a deferred annuity scheme during this period. And we have seen a tremendous demand for these two products, with the traditional segment growing at 60% year-on-year and annuity growing more than 200% year-on-year. So these have been some of the drivers for this performance during Q4 and overall for the financial year 2020-21.
And tell us about the momentum that you're seeing in the value of new business performance. And despite the pandemic, you have reiterated your guidance to double the value of double the VNB, by FY19 to 23. Are you on track to do this? And how do you plan to achieve the same?
Yeah, you're right. Despite the pandemic, we have stuck to our own aspiration of doubling our financial year 2019 VNB in 4 years. So in the journey, we have 2 years left. So given that we have achieved a VNB of 1621 crore rupees for financial year 2021, this aspiration requires growing our VNB by about 28% in the next 2 years on a per annum basis. What will drive this VNB? We always said that the first phase of this VNB aspiration journey is going to be based on margin expansion. And that part we have done very well in the last year. Despite a decline in the top line, we have seen the margins grow from 21.7%, VNB margin growing from 21.7% to 25% plus during the last year. So the first journey in this phase has been around expansion of margins, again led by protection. Protection has become 16% of our business today. So that has been a primary driver for margin enhancement, including the traditional savings products. From here on, I think the primary driver for VNB is going to be the growth. We have seen a 27% growth in Q4 on a year-on-year basis. I've also talked about the distribution capacity we have added. I talked about March, which gave us 108% growth on a year-on-year basis. We would like to take this momentum forward, along with all the new channels, new partners firing during the current financial year. So this gives us a confidence that we can be on this aspirational journey on VNB of doubling the FY19 VNB in 4 years' time. So that is the way we look at it. And we have also put a strong base for a sustainable growth, given the product mix and channel mix which we have executed.
Right. Mr. Kannan, how's the impact been of COVID on your overall business? With the second wave been fairly strong, do you really see it impacting business? Do you see higher claims? What is the kind of consumer trends that you foresee?
Yeah, yes, this is the pandemic which we don't have full experience even now, because we've been about a year into the pandemic. And the second wave, as you rightly said, we have seen the resurgence across the country. So as a responsible life insurance company, robust company over a long period, we have to look at primarily strengthening our balance sheet and ensuring that claims experience is handled quite well. So that has been our primary focus. So I'll talk about the claims part of it first before talking about the business impact of COVID. On the claims so far, we have had a net of reinsurance claims of 260 crore, and which we have paid out during the year. We thought that given the fact that maybe some of the claims have not yet been reported, because typically there is a delay, though the delay has come down over a period of time, there's a delay in reporting claims. So we thought we should make an additional provision of about 30 crores for claims that may have happened, and the event which may have happened, but the claims have not been received by us. That additional provision we have taken. Apart from that, considering that we had about 260 crores in the last financial year, we thought we should strengthen our provisions towards COVID. So another 300 crores we have added by way of provision. So as of today, we are holding 330 crores of provision for expected claims that we think will comfortably take care of one more year of such claims. So that is one part of the story. The second part, you talked about the business impact. April beginning for 10-15 days, we saw a good business compared to last year. And we believe that, even with the COVID second wave emerging, I don't think there will be any big issue regarding our VNB journey or APE journey. We say that because this time around, I don't think the lock-in will be as hard a lockdown. Lockdown will be as hard a lockdown as we have seen in the last year. Second, there is tremendous adaptability of the system. Customers are moving to digital. Distributors are moving to digital. So there is a more adaptability today and preparedness today, if you will, on handling this COVID situation. So that is a second big factor I see. And third, with the vaccination drive getting momentum, I do feel that things would get contained over a period of time. So all in all, yes, customers will move to digital, to answer your question, which has already started happening. We have also instituted several collaboration tools for the distributors so that on a remote basis, things can be transacted. The regulator on their part have given a lot of approvals to do business remotely, including removal of wet signatures. And if you have tracked the guidelines, they have extended the period of such dispensation to September. So that also gives us a tremendous ability. So all in all, I think the customers will adapt, the distributors will adapt. The impact on the business will be minimal, given that we have gone through 1 year of the pandemic and we are much more prepared today than we were earlier.
The amount of business that happens via digital channels, including customer onboarding?
Yeah, if you really look at our direct business today, it is 12.5% of our APE. Within that, end-to-end digital would be probably about 2-3%. Otherwise, that is the kind of direct business we do currently. And we think that this will accelerate as we move forward.
And for the entire year, we've seen the non-linked savings business grow quite smartly, but the protection business has come down slightly. How are you looking at the overall product mix shape going ahead?
Yeah, so on the protection side, the demand is very strong. There is no problem at all on the demand because given the pandemic and given the loss of lives and livelihoods, naturally there is a tendency to ask for more protection. So that is one trend we are seeing. However, there have been supply constraints on the retail protection side. The supply constraints because one has to be extremely careful in underwriting during the pandemic because we sell 40-year, 50-year products. Plus the reinsurers have tightened the underwriting norms and you have seen that the pricing of protection has also increased. So given these factors, and people have not been able to get the medical examinations done on the ground. So these factors have led to some kind of a supply constraint. Because of it, the full potential of the demand could not be translated into sales. But things are improving as we move forward. But I want to tell you that even in this situation, we've been able to increase the protection mix from 15% last year to 16%. And we have also been able to push the other lines of business within protection, which are credit life, which was very slow in the first couple of quarters because banks and non-bank finance companies not disbursing. That has changed a lot towards the end of the year. We ended the year with a growth. And the group term business has been a big opportunity. Even that we have been able to take advantage of. So I do believe that to answer your question on product mix, I think there is a potential for protection to even get to a 20% of our product mix as we move forward. On the savings side, traditionally, you're right, there has been a good momentum in traditional business. But I feel that depending on the market situation, we as a company should be ready with the products across linked as well as non-linked. Depending on the market situation, depending on the customer preferences, that will get taken up. The relative growth could be different depending on the market conditions.
And finally, your persistency has been very good. The EV has grown to about 29,100 crores at a strong clip of about 26%. How do you see this growth panning out over the next 2 years? And what do you think are going to be the key drivers for a good persistency to contribute to your improved EV?
You're right. The embedded value has grown to 21,900 crores for March 2021. Which saw an increase of 26% on a year-on-year basis. Within that, if you look at the value of in-force policies, that itself has grown at 29%. So all in all, this year had a very robust performance on embedded value. If you look at the components of this growth of 26% in embedded value, we saw about 15% of the growth coming from operating profit, embedded value operating profit, which again, if I look at the split of that 15%, roughly half came from the current year VNB, and the balance half came from the past year unwind of VNB. So primarily the value of new business, which we talked about earlier, that has been driving the embedded value growth. The rest of the growth came from the investments. You know that the stock markets and generally the financial markets have done quite well. So because of that, we got the kicker in terms of the investment variances coming into the closing embedded value. Going forward, you asked a question about what is the outlook for growth in embedded value. I would once again reiterate that our focus is going to be on the VNB doubling, which we have talked about earlier. That sort of feeds into the embedded value. And as you said, the persistency has moved quite nicely. That will be a contributor to the embedded value. The VNB and the persistency improvement will continue to drive the embedded value up. And of course, we are as we get into a scale this year, having turned the corner, I think operating leverage will also be working in favor of the embedded value. These would be the drivers, but our primary focus will be on increasing the value of new business, and the embedded value will be the outcome on account of that.
Appreciate your time, Mr. Kannan. Thanks so much for giving us that clarity on the business and the strong quarterly show.